Well, hi there and welcome to the ISC FX Options Weekly Outlook for July 18th, 2011. As always, this is Jason Ayers of OptionsSource.net. Let's take a look at the U.S. dollar index from a weekly perspective. This is a great way to gain perspective as to how the U.S. dollar has been trading against a basket of currencies. Well, the dollar index closed last week indecisively. However, the 75 level holds as support. Now, the 76-77 zone remains a key overhead resistance. Failure to hold at 74.75 opens the window for a continuation of the dollar down in the bigger picture. Let's take a quick look at a daily snapshot of the U.S. dollar index. Well, the daily chart reflects the brief test of 77 last week and the failure to hold that level. Once again, we see 75 holding as support. A break below is likely to yield a new short-term test of the 74 support level. Next up, the CDD, the U.S. versus the Canadian dollar. Well, the CDD closed this week with a test of the lower range of the 95-96 support. Now, a break above 96 is likely to meet with resistance at the 97-98 zone. However, failure to hold 95 signals a continuation lower. Let's take a look at the YUK, the U.S. versus the Japanese yen. Well, the YUK lost considerable ground last week. However, the 78.5-79 focal zone should act as strong support, suggesting a bounce here is likely. 79.5-80 is likely to act as a key overhead resistance. Let's take a look at the U.S. dollar versus the euro as seen here in the ISC FX options pair value EUI. Well, we identified a sideways triangle last week indicating indecisiveness. Now, although the EUI broke the upper trend line, the 70-71 zone still acts as resistance to any continuation higher. A break above 71 should confirm a follow-through to the upside. A break below 70 is likely to yield the test of support at 68. Let's take a look at the BPX, the U.S. versus the pound. Well, we were looking for a break of 63 to signal a trade higher for the BPX. However, failure to close above this level resulted in a drop to test the near-term trend line here. Now, this also correlates with a support zone at 61.5, 62. A break of this level signals a continuation lower. A bounce is likely to meet with resistance at 63. Let's take a look at the U.S. dollar versus the Australian dollar as seen here in the AUX. 93 continues to hold as support. Friday's trading activity resulted in a test of resistance at the 94.95 focal zone. However, a reversal and subsequent break below 93 signals a continuation lower. Let's take a look at a few of our key points. First of all, the U.S. dollar index traded as high as 77 before pulling back to 75. We need to see a break and close above 76 to confirm a continuation higher. A drop below 75 is likely to slip back down to test 74. The overall outlook remains indecisive. The CDD tested 97 but reversed quickly to break below 96. The 95-96 level remains a key support. A break below 95 opens the window for a continuation lower. The YUK lost considerable ground as it broke below 80.5, 78.5, 79 should hold as support this week. A bounce is expected, which is likely to meet with resistance at 79.5, 80. The EUI broke the upper trend line of the sideways triangle, but is yet to commit to a move beyond 70.71. We need to see a break above 71 to confirm a tradable move to the upside. The BPX failed to close above 63, resulting in a retracement back down to support at 62. We should see a bounce higher. However, a break below 62 signals a break below a near-term trend line, which is likely to yield a continuation lower. The UX once again traded along the 93 support last week. A break above 94 opens the window for a move higher. Failure to hold 93 should yield a move down to test 91. And this has been your ISC FX Options Weekly Outlook for July 18th, 2011. As always, this is Jason Ayers of OptionsSource.net reminding you to sign up for your free webinar at www.optionssource.net. Thanks for joining me here this week. We'll see you here next week.